Hi, everyone. I've got a fascinating guest with me this afternoon for this interview, and it is Michael Fahy, who is, well, how can I describe him? I think he's got some of the most overlooked sectors he covers in the Investors Chronicle, from engineering, manufacturing, defence, aerospace, and whilst everybody's looking that way towards AI and all the rest of it, actually some of these solid companies are the ones that actually UK leads the world in, and they're ones which are often overlooked. He is a Manchester United fan, so I almost didn't do this interview. But for you, the viewers, I've done it. Michael.
Hello.
Sorry for the snipes.
That's all right.
But we've got a great rapport going on, so let's continue with this. I've gone through your articles. I love the fact. Now, I'll tell you what I love the fact about this. It's the lesser-known ones. You do a deep dive into, say, individual companies, which people often overlook. And I think that's one of the benefits of having a credible source like the Investors Chronicle, is that we've got the experts. You did Michelmersh, you did Forterra.
Yep.
Obviously, Boeing's better known, but people still want to get another view. How do you find those lesser-known, interesting companies that the readers might otherwise have missed had they been trying to do it DIY?
Well, like a lot of the journalists at the Investors Chronicle, we have a kind of defined beat. And in general, we're covering those at least twice a year, depending on earnings. When you're looking at day-to-day news as well, it's often quite a lot more than that, and especially with some of the acquisitive companies, and some of the acquisitive companies aren't necessarily the biggest either. So you do find that the longer that you're in the role and the longer that you are covering a specific beat, the better you get to know those companies.
Yeah. Do you meet the companies, or do you think, or do you write into them, do you write to the board, or do you think, as I do, I'm afraid, which is, well, they're going to tell me how wonderful they are. Do you ever do you go through the earnings transcripts?
Yeah.
How deep do you get into the sort of microscopic stuff?
So there are very much two schools of thought with this. I know that you get fund managers like Terry Smith, who refuses to meet management, thinks it's a bad thing to get too close, to get too engaged, and that you should be able to rely on the numbers in reports. Then there are others who actively engage and want that, not the relationships so much, because your relationship should always be a little bit skeptical, but want the insight and want to be able to understand the company better. And in some instances, with good management, that should be something that you're able to achieve. And especially when companies are going through periods of transition. I mean, one of the defence companies that's on my beat, Avon, has been through quite a rough time in terms of making some bad acquisitions and management team being replaced. And then when new people are coming in, they're looking at things differently. They're closing divisions and they're talking about some of the historical issues that they've discovered. And you're not going to get the insight, I think, if remotely you're just looking at the numbers and going through the annual reports, as detailed as they are at times. I do think that a conversation with management is quite useful.
Yeah, and I assume that if we look at your readers, they're going to follow you because you're following the individual companies. And do you think your role is to give them, say, warnings, or just inform them, or show them hidden gems? I mean, I'm sort of thinking it's all three, but how do you see your role when you're writing for the audience?
Yeah, I think the role is to inform. We have an idea section where we will dig much more deeply into a company's performance, its valuation, its prospects. But they are ideas. They're not, we are explicit that we are not recommending, we're not an investment bank. I do think it's a useful, those kind of deeper dives that we do in the magazine, I do think it is a really useful exercise, both for us as journalists to get to dig under the hood of a company that we may have just reported on results on a little more. And it's also, I think, useful for people who are looking for those ideas, looking for potential investments.
do you ever get the companies calling you up and saying, what the heck? I mean, do you ever get them either lobbying, schmoozing, lunches, all the rest of it, or we just want to fly you out in our private jet to Paris to discuss our latest? Do you ever get? I mean, some of the stuff.
One of the advantages of working for the Investors Chronicle and a company, we're owned by the Financial Times. There are very strict rules in terms of what you accept and what you don't. All of that. I've sat through the CFA as well. I make my own kind of ethics pledges every year as to what I will and won't do. And that influence we're always wary of. And also, that come the next set of results, even if you've developed some sort of a rapport with a company, you have to be able to look at the numbers honestly, and you have to be able to, when companies perform badly, be able to be as honest as you absolutely should be in terms of discussing the performance.
Yeah, but obviously fair is what you mean.
Yeah, fair. In answer to your question as to whether or not we get companies lobbying or
any interesting suggestions turn up in the mail.
No, none of that. Anything like that just gets donated. But the lobbying part, you do get companies sometimes who disagree with your view, because we are putting forward a view.
Of course.
And there may very occasionally be something where we've got a number wrong or whatever. Sure. And if that's pointed out clearly, we fix it straight away. Facts are facts. Views and opinions are going to differ, and especially if you're reporting on a company that isn't doing so well, then they may not always appreciate the view you take. But so long as you've done it from an honest, knowledgeable standpoint, then our job is to do that for the readers. It's not to sugarcoat things.
Well, I guess that's again one of the benefits for our viewers watching now and people who will be listening to this, is that you don't have the biases that somebody who already owns the stock might have.
Yeah.
And you can remove those blinkers for them if need be. Now, the other thing I want to ask you, in terms of, as I say, the individual companies that you're picking, have you got any sort of war stories about sort of hidden gems that you've discovered, or the other way, things that you've sort of come across and you thought, oh my God, that's a scoop. I mean, everybody else has missed this. What's going on? Well, any good sort of dinner party type stories that you've been able to put into the Investors Chronicle?
I'll do a little bit of both, really. In terms of hidden gems, I find it difficult in terms of referring to some of the companies that we cover as hidden gems, because they're plain to see, and
but they might not be household names.
Well, even some that are household names,
right? Because
generally the companies team cover companies with a turnover of 100 million or so, whereas we've got Simon and Thompson, our small companies expert, who does companies below that. Is very well followed, very well regarded, and his job is really to look around for, I'd say, some of those hidden gems. But I do think the valuation stories with some companies can often be misunderstood. And when I first joined the IC 2.5 years ago, one of the first companies I looked at was Rolls-Royce, which at the time was going through a real...
perfect time to look at it 2.5 years ago.
Yeah. It was going through a real rough patch. It was still cash flow negative. It had lost huge amounts during the pandemic, and you could see that the momentum was there, especially in terms of the cash flow. And then the cash flow, once that starts to be fixed, you see it in the top line, you see it in the bottom line, you see it run through the company, you see better earnings, and that is what's happened really over the last 2 years, as you said. Some of that is due to a kind of recovery in civil aerospace generally, and the fact that it's big engines that fly on the side of wide-body planes are in the air more. But some of that, I think, is due to some of the self-help measures they've taken as well. So that's one, and that is... I mean,
it's like the jets that flies, it's just gone through the roof.
Yeah, but there are sometimes things that, on the flip side, that looking from outside, you're not going to know about. And similarly, around the same time, I took a look at Avon, and its shares had come down quite a lot. It done some fairly bad acquisitions, which didn't seem to be paying off. But it looked like a recovery story. And as it turned out, it really, really wasn't. It had a failure in its body armor business, which sent the shares down by about 70% in a week.
Right.
And I think the key with something like that is not to, although you cover a company for a long time and you get to know it better, it's not to bring prejudices of what's happened in the past with you as well. So whatever's happened previously, you don't forget that, but you certainly don't let it, or you try not to let it colour you as to where the company is in the cycle and how it's going to perform in the future.
Yeah. Well, I think you've brought in a few elements there, which is the benefit of what your role is within Investors Chronicle. You've mentioned obviously cash flow, the specifics, the P&L, the cash flow statement, the balance sheet. You mentioned the CFA. Now, a lot of the viewers will know what that is. A lot of them won't know because it's probably, I think, the hardest exam, because it's in 3 parts, isn't it?
Yeah.
It's probably the hardest exam in financial management that there is. I mean, unless there's some kind of PhD going on. That's unusual, I think, amongst journalists to have the CFA.
Yeah.
How has that helped you to be more of an expert, to dive deeper, and to be a better journalist for the readers, would you say?
Well, my own background is I was a business journalist for 20 years, but business journalism and financial journalism are 2 slightly different disciplines. And with business journalism, a lot of the time you're reporting the numbers, but not really digging into them.
No.
I think what it's given me is more of an understanding, particularly in terms of valuations. You spend a lot of time looking at valuation models, looking at future cash flows and how to properly value a business. And I think that is really what it's helped me to bring to my role at Investors Chronicle.
Yeah. Fair enough. As I say, I wouldn't have expected such expertise from a Manchester United supporter. So it really is transformational.
Plenty of us.
Let's go into some of the things that you've covered. Now, defence. Okay, I'm going to ask, as a layperson, the world seems to be getting more and more dangerous.
Yep.
Okay, China, NATO, Ukraine, Russia, Middle East, Africa. Unusually, Latin America seems a bit quiet at the moment, but by the time this goes out, that'll have probably blown up, and probably Antarctica with it. Tell me, why are those stocks involved in defense not doing the same as Nvidia is in AI?
I think some of them are.
Right.
When you look at, particularly in Europe, some of the European stocks like Rheinmetall,
which is one of the ones you wrote about, I remember.
Yeah, one of the, that's a big German industrial company. Yeah, well, that's since Russia's invasion of Ukraine, you're looking at a 5-fold increase in the share price. Similarly, Saab of Sweden, which does quite a lot of ground ammunitions and equipment, that has risen 4-fold. There are a lot that have doubled in price over that period. Now, you look over the pond at the US stocks, and they haven't had such a great increase.
Which is unusual, because usually the Americans are doing far better than Europe.
Yeah,
okay.
But I think some of that comes down to where we started from. And we started from US stocks valued at 20 times earnings, say defence stocks are 19, 18 times, and US stocks were really, UK stocks particularly, were in defence, were bargain bucket. There were reasons for that. I think some of it is down to ESG screening and the fact that a lot of people, for varying reasons, don't want to own defence stocks.
But if, like you and I, they're immoral and they do want to own defence stocks, then are you saying that that's an opportunity, let alone global catastrophes that are happening right, left and centre? You say, I mean, how do you see the sector over the next 12 months is the bottom line of what I'm asking.
Yeah.
Are you seeing that opportunity because money isn't going into it from some institutions, and so undervalued is undervalued?
Yeah, maybe. I think there's been a recognition, particularly with the some of the big B. So I mentioned Rheinmetall in Germany. BAE Systems here is another one which has had quite a big re-rating since the war in Ukraine broke out. And there are reasons for those two, I think, are because they're involved a lot more in the munition side, in providing the shells and this kind of short cycle order stuff, which is, despite there have been some big commitments from European governments made about meeting NATO targets of having a defence budget of 2% of GDP or higher.
And that seems like it's going to happen. I mean, that push seems only to be moving in one direction. So there should be more and more spending, because I think other than, Poland, I think, spends the most, but after them, Britain meets its target.
Yep.
The vast majority, I think Poland's 5%, UK slightly over 2%.
Greece always did well in Europe as well, but historically, you're right, most European nations didn't.
Were lagging behind
massively, so would Italians.
So many jokes we could make about the French, but we won't do that. but the point being that if that spending is going to increase, isn't it just blindingly obvious? I mean, if people are going to watch this and in 12 months think, oh my God, they were just telling us what was obvious.
Well,
see that the sector should be in one direction, and should people be running out? I mean, I know we're not going to give financial advice, but should be running out to look at and research defence funds, let's say.
Yeah, I think that's a good idea. I think there is an element of a re-rating that's happened with some of the shares already, but a few of the others are flat. And part of the reason for that is, although there's been those commitments to spend by European governments, it's not necessarily translated into orders until very recently. Only in the last couple of months have you seen big orders for whatever it is, land vehicles, radar systems, submarines, etc. They're only really starting to feed through now. And it's clearly going to be, whatever happens in the US, Europe has to look at its own backyard, and it's clearly going to be a multi-year phenomenon, I think, of higher defence spending.
Who do you see, obviously there's household names people think of, but who do you see as beneficiaries of that, which isn't already reflected in the price, and people might want to research more into or keep an eye on?
Yeah, there were a few, I think. In a very recent issue, the company's editor, Mark Robinson, highlighted Cohort, which is quite a small mini defence technology conglomerate, really, but it has been picking up orders at pace recently.
Sorry, the name again?
Cohort.
Cohort, as in a group of people?
Yes.
Oh, right.
Yes.
Imaginative name that they gave the company. Exciting.
Well, it's a cohort of companies.
Right.
So it's
It's a group, is it?
Yeah. And one of its companies picks up a huge order this week from the Royal Navy.
All right.
So that, I think, is quite an interesting one, because it's until the start of this year, it only gained about 5% since the outbreak. There are others. Kinetic, which is very much on the technology side. Yeah. It was spun out of the old DARA, the defence research business that was part of the MOD, and it made a big acquisition in the US last year, which looks like it could be a platform for quite significant growth. But as yet, those orders haven't really been coming through, and the shares, although they got an initial pop, have kind of tailed off a little bit. And I think that's an interesting one to look at. The other one, Babcock, which I think is a really solid company, which has gone through. Chemring is another as well. Yeah. Both of those two have a lot in common in that they had done acquisition sprees over the past decade, 20 years, which went badly, left them massively over-leveraged, and have recently been putting the house in order in terms of fixing those, repairing the balance sheet, selling off non-core businesses, and reinvesting the improved cash flows that have come through from that into expanding. In Chemring's case, it has an arm that is involved in all of the cyber defence. It has a more traditional arm that's involved in energetics, which is the bit that's really bubbling along at the minute, because, again, the substances in those are going into the ammunition shells, which are desperately needed in Ukraine, and production of which is being hugely ramped up. Yeah. Babcock It's more of a services business, but it has a big role to play in terms of renovating the nuclear submarine fleet that's there already, and also it's getting orders for the new fleet that's been ordered by the Australian, UK, and US governments combined, which will run into the 2040s. Some of that work.
Yeah. And how quickly does some of this figure into the prices of the individual stocks? I mean, like I said, I'm impatient. I'm sure some of the viewers are as well. They hear about it. When's it going to actually give the hockey stick move up? When's that going to happen? Do you find with defence that it's lower, or is there some kicker that needs to happen?
I find, as there are with shares in a lot of industries, there's an initial pop on some news where something might go up 10%, 20% in a day. But unless there's a lot of volume in those shares, they tend to drift back downwards until the next announcement. And sometimes you look at fundamentals and you don't see any. You just see maybe a good share that's being sold off because people want to redeploy the money into something else.
Well, that brings me to another interesting point. So I was looking at some of your articles now. You have multiple hats in the sense that you're going to report what's happened, and you're also going to talk about what might happen. And the what might happen is the bit which obviously is where, if I've got my money-making hat on, I'm thinking, right, what might happen? Sure, is the analysis. What's happened is where I'm just thinking, look, I just want to read what's going on in the world. Okay, so when you take one which you talked about, fluid system shares were up 30%. And you talked about this pop. How should readers read something like that? Should they look at something which has happened as, well, that's just happened, just for information? Or should they look at it as, well, look, it's gone up 30%. This might be one you want to keep an eye on because there could be more to come. How should they interpret that kind of backward-looking thing?
Well, I think the key is not only to look at what's just happened, what caused the pop, but maybe what's happened in the year or two before that, the 5 years before that as well, because that's a case in point here. Fluid Systems may have got a 30% pop, but it got a pop because there were profit warnings last year and there were quite sizable leg downs. In some instances, it is going to be useful because anybody who's buying those shares during a pop is buying them on expectations of better returns in the future. Sometimes they're not always easy to see, and sometimes they're very difficult to work out. I mean, if you look at a company like Melrose, which has done really
popular with the readers and viewers. I know this from the chat groups and social media.
Yeah, and it's really popular because it's had a great track record. Then it did the GKN deal in 2018, I think, which was the biggest deal it had ever done. And it's also proven to be the most difficult for obvious reasons. You know, it's two big end markets are automotive and aerospace. And then it went into the pandemic and car production fell through the floor and planes stopped flying. Yeah. So it was really hammered by that. It's done its restructuring. It's hived off the automotive bit into a separate company, Dowlais, now through a spin out last year. But if you look at Melrose, and it's been saying in its own capital markets days, in its own presentations to investors for the last couple of years, that this is a business which has a huge amount of cash flows that are coming through long-term engine supply contracts where they've done the hard part in the early part of the contract in terms of building the engines, and now they're on planes. They should be much more higher margin contracts because in general you're servicing them for the life of 20 years or them.
Now let's say I was the editor-in-chief of Investors Chronicle. I came up to you and said, right, you can only write about one sector. Mm-hmm. Okay. You're going to have to give up all the other sectors. And separate to that, I'll say, or you can only write ever about one company. Right? Okay, bear in mind the readers and the viewers. You want to still keep the readers and viewers. All the rest of it. Which sector would you pick? Which is sort of a between the lines way of me asking, what should people really keep an eye out based on your patch, and which company would you pick to write about? Do you find the most fascinating?
So, as I said, I've been a business journalist for 20 years, so I've covered pretty much every sector there is out there. I've done financial services, I've done retail, and I like that variety. And being a deputy news editor allows me to dip in and out and to cover various things whenever something interesting happens. I think that's quite a luxury on my part. We have somebody covering property. I've covered property before. Which have got some really good quality assets, but have taken a bit of a bath over the last 2 years.
Yeah.
I would say both of those would be great companies to watch. However, I really like my patch. I like doing the engineering side. I like the variety of it. I also like writing about aerospace. I'm not answering this very well because I'm giving you 3 answers. One,
that's right. Politician. Next career in politics. Yeah, exactly. What about space? Do you cover space?
I have covered space. Yes, I don't cover space on a day-to-day basis because there aren't that many real investable vehicles other than the Seraphim Space Investment Trust, which Dave Baxter covers.
Yeah.
I did cover it last year though because again I think it's a fascinating market, and there is some links to obviously a lot of the companies that I cover from an engineering background, whether that's Boeing, whether that's Airbus.
Yeah.
And there's so much that Elon Musk is a polarizing character, I would say. But in terms of what he's done in space, he has dragged this industry to a place where he's made it commercially viable when the likes of Boeing, when NASA and nobody else could. And I think that is definitely a market to keep an eye on as well.
Yeah, absolutely. And obviously, if you're writing about him, you're never going to get bored.
Oh, no.
Because...
So if you were picking one company, would I pick Tesla? I don't know.
But you'd probably pick the man rather than the company, and just whatever he does, it's going to be fascinating.
I don't know if I could deal with a constant Twitter abuse if I was writing about Tesla shares.
Well, do you ever get that? Just in closing, do you ever get people... Because I know people get passionate.
Yeah.
Readers of Investors Chronicle and stock investors can get very, very passionate.
Yeah.
And some will, it's that confirmation bias. Some will probably write it and say, Michael, you're a genius. You should be Prime Minister. The article you wrote about the stock that I own.
Yeah.
And others will say, where did you get this guy from?
He doesn't know what he's talking about.
Do you ever get a bit like being manager of Manchester United? Do you ever get, if it's a good result, we love you. If it's not.
I don't want to invite too much of this onto me because thankfully, not a great deal. And in general, when I've had comments that have been fed through to me from readers, quite often they're very, as you'd expect, they're very informed.
Well, I was going to say, they're civilized.
Yeah. And they're people who may have been following some of these companies a lot longer than I have.
Yeah.
So you've always got to keep an open mind as well when people get in touch with a review.
Yeah. No, I think that's the other thing, that the interaction with the readership. And as you say, some of the readership, I mean, they'll be older than you and I combined.
Oh, yeah.
And they'll have been following a company they'll be going to the AGM and sitting through those. And I think you're absolutely right. Getting that to and fro with them whenever it happens. And of course, it happens in a minority of cases. It's fascinating in itself. We've got to cut it short, sadly. That's the end of it, I'm afraid. So, Michael Fahy, thank you very much. Continue doing what you're doing in, as I said, I said unsexy, but I think we made it sexy by the end with, a bit of Elon Musk thrown in and a bit of space technology. At least you can go back home to your, what did you today? Well, a bit of space again, darling. Not like the others, not interest rates, not tax, not chancellor. But we got to talk about space exploration a bit.
There's a lot to be said for building things and building things well.
Thank you, Michael, very much.
No worries. Thank you for your time.
Thank you.
Cheers.
And remember, you can have a 12-week trial to the print and digital versions of the Investors Chronicle for only £12. And don't forget to sign up to your free, yeah, I did say free, Investors Chronicle daily newsletter to get your stock market news, analysis, highlights, all into your inbox every single morning. I'm going to say it again, free.